Hi everyone, it's always nice to meet you in a new episode of our gold price weekly forecast. Gold today on the last trading session of Friday, gold spot printed a closing price a little above $1,791 per ounce. Numbers rounded and the market is closed. And on the last week, gold traded as low as $1,780 per ounce and as high as $1,853 per ounce. Numbers are rounded and the market is closed. From a technical point of view, gold is in a correction. It's let's say bearish, and it's trading below its all daily simple moving averages at the moment. The RSI readings are bearish on the daily chart and still moderate on the weekly and the monthly chart. And for the supports levels, the supports are seen at 1780. This is crucial. If broken, then 1759. If broken, then 1680. The resistance levels, we have 1793 to 97, 1807.8, and 1828. The pivot on the weekly chart at 1808 and on the daily chart at 1791 will act as a resistance and the other will act as a support. That's all for numbers. We'll move on now to the economic calendar. On the economic calendar for the coming week and from the United States, we're waiting for the Chicago PMI to be released on Monday, then ISM Manufacturing PMI, JOLTS jobs opening on Tuesday, and the ISM Manufacturing PMI on Thursday, and so many other important economic headers. That's all for economic calendar. We'll move on now to the trading strategy. Hi again. In this part of the video, we are going to start with a quick recap. Then we will go through the US dollar chart and the gold chart, and after that we'll arrive into a conclusion into how to trade this market for the coming week. Moving to the recap, on our last video we said we should focus on the 1828 as it's going to act as a support. If market comes near to this figure, it's a buy with a stop loss below it. Once the market accepts to trade below 1828, this will create a massive sell-off because this will invalidate the breakout. Moving on to the US dollar daily chart, as you see, I still do expect that the US dollar dips is going to be bought until we arrive at 98.5. If this market can find acceptance above 98.5 for at least one session, it's going to jump to 102 to do what we call it technically a double top. Then you can expect that the US dollar is no longer a threat for the all over markets. I mean the currencies that are priced against the US dollar, or even gold, silver and other precious metals, which is highly sensitive for the US dollar. So what we are concluding from the US dollar chart, that we are still having at least 1.5 figure until we know how the US dollar is going to do in the coming few weeks. So it's a buy on dip. Moving on to the gold chart, I brought with me today the gold monthly chart to show you that gold is trading within a triangle, and the breakout to the either side is going to be massive. We are going to talk about maybe to the upside a target of $2,600 per ounce, to the downside a target of $1,300 per ounce. If a break happened to the upside, you are going to 2,600, to the downside you are going to 1,300, and the breakout has to happen in a month or two from now, no longer than that. Now, the point of bringing this chart up is just to tell you that I'm on the bear side of this trade. I do believe that this market has to come down to 1,600 minimum or to 1,300 to make a full correction. Then after that, it can rally to any either level you hear from other analysts. Okay, but at the moment it has to come down because the US dollar wants to go up. It's very clear. Okay, the US dollar is not going to ease. Okay, before it hits 102 in terms of the DXY. For the coming week, I'm going to pay attention for 1780. If gold find acceptance below 1780 spot gold, even by $1, I'm going to enter a sell position, and with a target of 1759 to 1720 or maybe lower, depends. I'm not interested yet to enter a buying position in gold. It could bounce, but for me it's not a buy still. That's all for our video for this week. Thank you guys for watching. Please share, like and subscribe, and I will see you next week in another video.